Donald Trump's plan to make America great again seems to have more side effects. Consumer confidence in the US dropped to a two-year low. As a result, disappointed investors have started pulling out of American assets. As a result, the US dollar opened the third week of March near a 5-month low. The US currency is also under pressure exerted by the euro. Ironically, Trump himself has influenced the changes in the European politics. But for now, let us look at the key data that will affect currencies on a Wednesday, March 19. You're watching Traders Calendar. The trading day begins with the Japanese data that could affect the yen. Machinery orders in the private sector slowed down in December. After rising by 10.3% in November, they increased by just 4.3%. And this signals weaker industrial activity and cautions business sentiment ahead of a new economic cycle. In January, the figure is expected to fall deeper to 4%, which could put additional pressure on the yen. The yen and the Swiss franc are partly acting as a safe haven assets, making the Bank of Japan's rate decision a key event for traders. In January, Japan's central bank raised the rate to 0.50%, their highest level in 17 years. In March, the regulator is unlikely to make any changes. However, comments from the Bank of Japan's governor could spark market volatility. If Haruhiko Kuroda hints at further tightening, the yen will strengthen. European investors will focus on a fresh inflation data. In February, consumer prices rose to 2.5% and thus reaching a 6-month high. Higher forecasts suggest a decline back to 2.4% in March. Falling inflation increases the chances of a rate cut by the European Central Bank, which could weaken the euro. Core inflation, which excludes fuel and food costs, is also expected to slow down in February. After remaining stable at 2.7%, the figure could drop to 2.6%, and this could strengthen expectations of a rate cut by the ECB in the second half of the year, putting additional pressure on the euro. Oil traders will closely watch the weekly US crude inventory reports, especially the official data from the US Department of Energy. The last report came in lower than anticipated at around 1.5 million barrels. If the new data unveils a 1.9 million barrels increase, oil prices could decline. The highlight of the trading day will be the Fed Reserve statement. After 3 rate cuts in 2024, the US Central Bank paused and held the rate at 4.5% in January 2025. Meeting minutes revealed that policymakers prefer to wait for inflation to slow down sustainably. A rate change in March is unlikely, but markets will react to the Fed's economic forecast and potential rate expectations for the coming years. The main focus will be on Jerome Powell's speech, of course. He is expected to focus on questions about Donald Trump's impact on the US monetary policy, and his answers and comments are likely to trigger significant market volatility for the US dollar and other trading instruments. Please note that the time of publications is set in GMT +3, and the next video review of a Traders Calendar will be released on a Wednesday, March 19. And now we wish you profitable trading and see you soon!